Hey, this is Phil Ratcliffe, and thanks for tuning in for another one of our weekly live streams. Today is a little cold, but hopefully we're heading into spring, and we wanted to share with you this week something that is pretty near and dear to our heart. And one of the main reasons our firm is actually named Rebel Financial, because we get asked a lot, like, that is a weird name for a financial company. Why did you name your company Rebel Financial? And a lot of it has to do with how we believe and how we feel like we're very different from a lot of the other financial industries, companies in our industry out there. So what I wanted to do today is kind of give you an overview of some of the things that we feel that you should be considering when you look at a financial advisory firm or you look at doing business with any firm in general. And so just to give you that overview, I'm going to talk about what is the difference between a financial firm or any professional that has to treat you like a fiduciary versus not being a fiduciary. Specifically in our industry, when we talk about professionals and firms that are fee only versus those that are not, then I also want to hit into a little bit about some of the things that are really coming out with some research and what so in terms of the more recent, the last 25 to 30 years of profit maximization versus trying to optimize for all stakeholders. Then I also want to talk really quick about ESG investing, which stands for environmental, social, and good governance, and impact investing. And then lastly, like I had just started to mention at the beginning, is who you're doing business with, are they giving back? Are they working towards a world that you would want to live in, that you would want your children to live in? So first of all, let's hit into fiduciary. And this is something that, if you would have asked people like 5 years about, most people wouldn't even have heard that term. Nowadays, a lot of people have heard it because for the last 2 years, the government or the Obama administration has really been pushing through the Department of Labor to make more advisors in the financial world fiduciaries. And what that means is they have to look out for the best interests of their clients. And the interesting thing is when we look at consumers, investors out there, 90% of them think that their financial advisor or their financial firm or their bank is looking out for their best interest, which is absolutely backwards from the reality. It's about 10% or less. So being a fiduciary is an important thing. And one of the things I want to share with you real fast is we got a new video that you can find on our website. It's right there that we're going to play for you real fast. It's simple, but I think it'll break it down. So let's go ahead and play that video.
You may have heard the term fiduciary in the news recently. It's a term that has gained popularity as the regulatory environment continues to shift and evolve. But what exactly is a fiduciary? And why might someone choose to work with an advisor who holds themselves to a fiduciary standard? A fiduciary refers to a person or organization that is held to a higher standard of conduct and trust. It means that as financial advisors, we are ethically bound to act in your best interests, essentially putting your interests above our own. While the term has become more widespread lately, the concept is nothing new. Regardless of any regulatory body, we always work to represent you, to ensure that the financial advice we provide is objective and unbiased, and that your unique needs are always our primary focus. It starts at the very beginning when we work together to complete your financial profile. We work with you to understand your personal and financial goals, explore what-if scenarios, and plan for the future. By working together in this way, we can give you a more thorough and informed financial strategy. And as life changes, we will be there to ensure your plans are still on track. Being a fiduciary is about loyalty, honesty, trust. These are the standards we hold ourselves to, and we always will.
Okay, so I hope you enjoyed that video. Again, you can always find it on our website right there. But I think the main thing to take away from this is there are a lot of firms and advisors in our financial world that will be a fiduciary to you. So I think the thing to take away from that is you want somebody that's willing to be a fiduciary with you. And one way that you can almost always make sure that that's the case is if you hire what's called a fee-only firm. So in our industry, there's fee-only and there's commission-based. And there's some people that do 100% commissions, and then there's some people that mix. But fee only means that only clients pay those advisors. Generally, when you're fee only, you're always a fiduciary to your clients. Most of those people, like us, will be a member of an association called NAPA, the National Association of Personal Financial Advisors, and we sign a fiduciary oath to always be a fiduciary to our clients. There are lots of great men and women out there that work for lots of different brokers or insurance broker dealers or banks or what so that are good people, but their financial institutions won't let them be a fiduciary, and it's very hard to just know who's good or bad. So our recommendation to you would be to hire a fee-only planner just to be safe. So how do you find a fee-only planner? Well, there's multiple things that you can do. I'd say the biggest and kind of one of the best ones is if you go to NAPFA, NAPFA.org, they have a little thing down here that says find an advisor, and you can either search by area, or if you already kind of know who you're looking for, you can search by name, and it'll bring up some advisors that are close to you. That is going to encompass most fee-only advisors, but then there's even differences in that area. If you're looking for somebody that only charges by the hour, you can check out the Garrett Planning Network. So again, you can Google these things and they'll come up, but those will be financial advisors that only charge hourly. Some people really like that. I mean, we don't do hourly planning because we find that a lot of our clients feel like they're getting nickel and dimed that way. So we like to charge by the project or by percent out of what our clients want us to manage for them. And then there's another one called Fee Only Network. Where is that? I skipped it. Fee Only Network. So obviously that's pretty easy, but you can search for advisors through here. And a newer one is called XY Planning Network. So if you're Generation X or Y and looking for a financial advisor that's fee only, that is probably closer to your age and also will take smaller clients, we will as well too take smaller, just getting started clients. But a lot of fee only advisors will say you have to have at least $500,000 or you can't be a client. There still are fee-only advisors, even for people just starting their careers or what so. So those are some resources that you can use to find a good fee-only advisor. So the next thing I want to hit down is something that's kind of, as I've read over time, it's something that I've come to a conclusion about. And one of the main reasons why we left the financial world to start Rebel Financial, and that is the last 20 or 30 years, the business industry's fascination with profit maximization, in most circumstances to the detriment of other stakeholders like employees and our communities and our country, etc. So that they think that the number one thing is always to make the maximum profit for shareholders, which I guess from a theoretical economic perspective sounds like it makes sense because shareholders are the owners, so the first loyalty should be to them. But I think what we're starting to find out now, there's lots of research in what's going around, that the last 25 or 30 years, firms were actually not more profitable, and in some cases less profitable than the previous 25 or 30 years when our business schools were not espousing this philosophy, and we are all worse off for it. Median wages adjusted for inflation are lower. Our middle class is falling out. A lot of companies, unless they think they can get something back from it, won't donate their time or money to our communities and charities, etc. Always looking just for the lowest tax rate instead of saying, I've got a good country with a good workforce and good consumers that are buying our products, we're going to give back. So in that respect, I think looking at companies that are trying to do the right thing, that care about all of the stakeholders involved in doing business, meaning all the customers, all the community, all the people that work for them, all of the clients, all the shareholders, it should be together. And you can find that. So again, I kind of put in here, just Google, has profit maximization serve shareholders well? And you'll see all these different articles by Harvard Business Review and Forbes and Washington Post of research that's been done. It's very interesting, but you can find companies that are doing good things. I mean, one of the main instances of probably one of the earliest of these is when Henry Ford decided to pay like 3 times more than what the going labor rate was so that his employees could afford to buy their cars. And it's important. So anyways, that is one of the things that I'm kind of passionate about. At Rebel Financial, we don't try to maximize profits. We want to make a good living, absolutely, but we want to do what's right for our clients. We want to be involved in our community. We want to give to charity to make the world a better place. It's not all just about saying how big of the piece of the pie can we hold for ourselves. So the next thing I'm going to skip down to is ESG, or environmental, socially conscious, good governance. And impact investing. And I've followed this for like the last 10 to 12 years, and it used to be a niche area, but now it's one of the biggest investment areas. It's where some of the biggest inflows of investing are going into. And when I started, the general misnomer was, well, if you're going to invest here, you're going to pay more and you are going to earn less. And the interesting thing now, since it's so big, the costs of it have really come down. And so it's not that much more expensive to invest per your values in companies that have good policies towards labor, towards their community, towards their employees, towards charitable giving, towards making products that are good for the environment, and being responsible for everything that they're doing. And some of the data that's coming out the last 2 years, the 3, 5, and 10-year performance has actually been better. So we're actually seeing that maybe some of these things aren't just something that we feel about that will sacrifice some of our return, but you could actually make more money doing what you believe in, and it's probably the right thing. So this is something I'm starting to bring up to my clients more, to say, hey, if you even kind of feel this way, we should take a look at possibly moving our investment strategies as well. Now, another side of this is called impact investing. And impact investing is almost a step farther. It's not only just screening to invest in companies that are doing good things, but actually those companies, as we own them, we own most of the publicly traded companies. And when CEOs are getting paid thousands of times higher than their median worker or what, so this is a travesty. It is a robbery of us, because that's our money from our retirement accounts and what so. And the only reason that they can do it is because we don't vote to say no. And we should have that power, but our mutual funds vote for us. And they are still doing the profit maximization. So they think that they bought into the argument that these CEOs put out that this is the market rate. But some of the impact investing, these mutual funds are voting to say what's right, not excessive CEO pay. We need to do environmental studies. We need to see if cutting labor costs is the right thing to do, or maybe that's just a short-term ploy so that this CEO or executive person can get their bonus payout on their stock options in the next 1 to 2 years. So anyways, I think this is a very important thing. If you have a financial advisor, talk to them about this, and maybe pursue it. So the last thing I want to talk about before we kind of wrap up is find businesses and firms and professionals that align with your values. There's so much out there, just like with the election and this, and people have very strong feelings one way or the other. And, some people don't even vote because they don't even think it'll make a difference. But, we are a well-off country. And we've done really well historically throughout history. And just along with that impact in ESG investing, who we decide to purchase from, who we decide to invest in, where we decide to hold our bank accounts, our investment accounts, does matter. And if a lot of us chose with our feet to vote that way, it would make a huge difference. And so, for instance, in us, how we believe as a company, we believe in an open, progressive society that is trying to make the pie bigger for everyone so that everyone can have a better life, versus the pie is this big, maybe even shrinking, and we got to try to exclude other people to get our biggest piece of the pie. That's a really sad existence. But if we work hard to make the pie bigger, we can all benefit. And if we make smart, good decisions, we can benefit with other companies and people that are trying to make the world better as well. It's kind of a self-fulfilling prophecy. So in that respect, I mean, when you look at us, we've lowered costs 3 times. I constantly talk to other business people, and they're just like, you should raise your prices. You should, increase your margins, because you can. Other people are charging this much more. And I'm like, no, we make an awesome living for what we do. We can even give 20% of what we make to charity. And so, you can even find this on our website. We have a foundation, the Rebel Financial Foundation, which 15 of that 20% goes to, and that is to try to raise money for the NSF, which is the National Science Foundation, and the NIH, which is the National Institutes of Health, because we want the future to be good for our kids and our kids' kids. And when you really think about dollars that we could spend as a society, say like the government or investing in future technologies and getting rid of diseases is probably the most impactful thing you can do with your dollars. But unfortunately, the last 18 years as a percentage of GDP, that's been going down. That's very sad. This is something that needs to go up. We believe in this, and we try to do that. On the other side, like in the beginning when I was talking about advisors and fee-only advisors and this is a nonprofit that we started. We give 5 of our 20% to help other advisors be independent, run their own firms to work for clients, not for corporations. And so we put our money where our mouth is. Not only have we lowered costs 3 times since we started, do we believe in these things, we help our clients accomplish their values, but we're also trying to give back as well too. We do multiple things. We got a challenge, Columbus 5K coming up, where we're paying for all of our clients and trying to get a big team together to support the Ronald McDonald House. We have a golf tournament and a shooting thing coming up, which all the profits go to these nonprofits. And then later on in the year, we're going to be doing the 5K for prostate cancer in Columbus. So come join us for that as well. So the point of this being is that there are a lot of good businesses out there, and a lot of them are community. They're smaller, medium-sized businesses that are run by people that aren't motivated just by what the stock market or the big MBA universities say should be how you should run a business or a nonprofit. Because when it comes down to it, we, the people, decide what our society and our future is going to be. And even doing business or how you're going to invest your money, etc., can make a big difference. So again, this kind of goes through helping you maybe find a financial advisor, maybe thinking about how you could even invest and do well with your investments to grow your piece of the pie, and also thinking about how you can do business with other businesses that are going to help to perpetuate a future that you want to live in and you want your children to live in. So thanks so much for tuning in again today to our weekly live stream. We're always here to help. You can see almost on all of our websites. We have chat boxes you can call anytime. We do a free trial. If you ever want to give us a try, feel free to go ahead and do that. And again, have a super finish of the week, a great weekend, and we hope to see you next Friday, 10:30.